Good afternoon, traders, and welcome to this week's weekly market analysis class, Monday the 28th of May. Before we get started, as always, please understand that any advice in today's session is of a general nature only and that your personal circumstances have not been taken into consideration. Okay, let me bring forward my calendar of the events that are happening. Usually the first week of the month, of a new month, it tends to be the highest data events that occur. Monday, Tuesday is quiet. It's basically the end of May, but the activity kicks off and starts to really heat up towards the end of the week. Last week, in terms of major things that happened, the story continues with the pound, with more continued bad data and disappointment. On Friday, we hit, or I wouldn't say record lows, but we've been tripping off stops and keep crashing down as the first quarter economy figures came in basically as the worst in, I think it's since 2014, so nearly 5 years. And basically it's put a hurdle, or let's say a speed hump, in the Bank of England's decision as to whether they will raise rates in August. So that remains to be seen. Now we do need a drastic change. It has been doom and gloom for the pound of late. It's now nearly a consecutive 4 weeks in a row where it's just basically one direction without any retracement. We are coming up to a key possible support level, so maybe perhaps that is the turnaround. Maybe Friday was the turnaround. We need to wait and see what happens there. On the US side, the pro US dollar momentum continues. FOMC meeting minutes were on the positive side last week, and we all await to see if they will pull the trigger in June, which is just around the corner basically. So should that happen, then perhaps the US dollar momentum may continue. As it continues, the best indicator for the US dollar is usually against the yen, and we can see that against the yen it has kicked on quite significantly. Our own Aussie dollar is holding its own ground. And we basically just we are a little bit more dependent on China data, and to see what happens in that front. The political, or should I say geopolitical warfare between the US and China has taken a step back last week, and nothing major was said in the headlines, so there was no major market movements coming from that area. If I now draw our attention to the calendar, which I have in front of me, this is a week where the US dollar has lots and lots and lots of data. If you have a look, it's almost dominated entirely by the US dollar. We have the consumer confidence number on Wednesday. Then we have the private sector non-farm payrolls on the same evening, crude oil, and then of course the big one, if there's anybody new in trading, this is traditionally the highest volatility data announcement. It's the non-farm payroll numbers from the US. It happens on the first Friday of the month, and happens to be this Friday, which is June 1. So look out for that one. It happens at 10:30. If you haven't seen market volatility or the market jump around, it's a good opportunity to have a look just to see what happens. Of course, if we do get strong non-farm data, good job numbers come through, that will more than almost cement the mind of the FOMC when they come to their June meeting to see if they will take action on those interest rates in June. Okay, so there you have it. That's for the US dollar. The only other major news to come out this week is for anybody that trades the Canadian dollar, and it's their rate decision. It happens on Thursday, or rather for us it's like Wednesday midnight, and it's they give the statement, their rate statement, and the actual decision whether they are increasing, decreasing, or leaving everything unchanged. So those are the two major headlines from all the data this week. In terms of, I guess, the currency pair that's going to be affected the most, well, it's no surprise that that will be the US CAD. So any US CAD traders, look out for that. We can get quite a lot of volatility this particular week for you. And as always, the times that I'm showing you are in my local time, which is Australian Eastern Standard Time, otherwise known as Sydney time, which is where I'm located. Alright, if anybody has any questions, please type them in. If you've gathered any questions throughout the week, cut, paste them in. As I see them, I will address them for you. Let me bring my charts forward and let's begin to analyze what the market has done, what opportunities are there for us, and let's see if we can take advantage of anything. All right, kicking off with the Aussie US dollar. Now, from the chart that I'm showing you, we saw last week we were over here somewhere, and I said I really wanted to get out of this region before I became interested in a trade. We kind of just hovered it above it. We didn't produce anything, and look, at the moment we're still in there. I would like that to get towards that level there. If we go to that level and produce something there, then I'm definitely interested in a sell opportunity. Okay, where we currently are right now, we may get an inside candle out of these two candles. Let me just zoom in a bit more so everybody can see a bit better. So we may get an inside candle opportunity off these two, but this one wouldn't necessarily be the high because this one here is higher than that one there, so it still wouldn't really satisfy what I'm looking for. So I think with this particular pair right now, I need to see it leave that area to give us a more definitive entry signal into a nice trade. At the moment, I can see, yes, that we are in downtrend, and I'm looking to try and find the trade there to hit me down, but it's just not showing itself. So I need a little bit more evidence, and the only thing that I don't like now is that, look, the highs have been starting to get higher. So is it a reversal, and perhaps we could be going back in this direction? So because of those reasons, and it's not definitive enough, I will just sit and wait on this one until I move out of the grey, or it basically moves straight back into the grey, and then it may give me an opportunity over there in that direction. Okay, so at the moment, Aussie US dollar, this week we have it on no trade. Euro USD. Okay, last week Euro USD, I drew this line because I thought perhaps there might be something there, and I'll just draw it across, and when we got there, nothing was produced. Okay, we didn't get a single entry there, and we can see that the market has just continued to go straight down. So essentially that line didn't play out for us. So let me just get rid of it, and now I'm just going to shift it along to this new point, and let me zoom out a little bit and you'll see. So now what I'm doing is I'm catching this point here and I'm transferring it across over there. Let's see if perhaps the market offers us something in that area. Let me zoom in so we can all see again. So if the market perhaps presents a price action trading opportunity on that level there, well then I might be interested in taking that trade as such. Okay, other than that, this market is just like, look at it, it's almost just one direction, and that's just purely from the US dollar strength. And of course there has been not the best of news from the euro side to help the equation. So it's kind of strange what this movement is. 750 pips, and we really haven't had any correction, this little tiny bit there. So if we do get to this level here, there's a good opportunity that we could get some kind of a correction. So definitely I'm interested in that trade there. So for this week, the Euro USD, just highlight this area. Let's wait for it, and should it arrive in there and produce the correct price action candle pattern, well then definitely this is the trade that we're looking for. Any questions on the Euro USD? we shall move on. Let's have a look at the US yen. Now the US yen is an interesting one, because let me zoom out first of all. How far am I? Okay, so if we zoom right out, you can see that I'm catching this channel, and essentially I'm waiting for the market to get to that level so that I can take this particular trade as such. And we've been tracking this for a little while now. Let me zoom in again and let's see. So this is where we are. We have produced today. Now this morning when I did my daily call, there was a gap in the market. Let me zoom in one further so everyone can see it a bit better. Okay, there's the channel, you can see it. So there's an inside candle over there situation, and you could think that we are in trend, and if we were to take that trade, you would have taken it at the break. Okay, your stop would be here, and there appears to be enough room to get to that channel where we feel that there might be some resistance to the trade. Okay, so in theory it looks good. There you can see it looks good. The only drama was that when it opened already beyond the inside candle, so there was a gap. So if you want to see that, I'll go into a 15-minute chart and you'll see it clearly. So this is where the market closed on Friday. This is where the market opened this morning, okay, and it was already at a level which this was the high of the previous candle, so this level was already breaking it. So had I had a pending order, I would have got triggered immediately at that high level. Now because of that, I didn't call this one out as my daily call trade, and now that I'm looking at it, it's come back down and it's actually at a lower level. So the question now is, who's interested in taking this as a trade? If you feel that you don't like it, just type in no. If you like it, yes. And if you're not sure, just type in question mark. Okay, but can I just get an answer from everybody? Let's just see what the room is feeling, and we'll make a decision based on that. Okay. So to recap, your entry would have been there somewhere, and the trade is in this direction. The stop would be over here somewhere. At the moment, it is at a lower level. The stop will still remain the same level. If we decide to take it, we're just getting in at a little bit of a better price. Okay, let me read the responses. Just give me 1 second. We have more question marks and more no's. We've only got one person that said yes, actually. Everybody else has said no. Okay. Okay. Question is, what would a jump mean? What I'm referring to is that when... Okay. Let me try. Give me a second. All right. So let's say this is where the market closed on Friday. Okay. And let's say that I had a pending order at this level. Okay. And this is the level that I wanted to buy. So it's a pending order. Now the market closed down here on Friday, and so say as it closed, I placed a pending order to buy. That would be a stop buy because it is above the market. So this would be a stop buy order. And then the market opens up here. What I'm saying is, the way that a stop buy works is, as soon as that price is breached, your order converts into a market order. And what does a market order mean? A market order means get me in at whatever price the market is at. So what would have happened if I had my pending order there? That would have jumped me. It would have triggered here, instantly becomes a market order. That's where the market is. So I would have got filled at this level up here, not at this level here, and I would have got jumped. So sometimes some people call this gapping, okay, but that's what would have happened. Okay, it also can happen with your stop order in a very volatile market where you're trying to sell at a particular level, get out of the trade. There's many other people trying to do the same thing, and there's not enough volume to fill everybody's order. Okay, does that explain it a little bit, Dennis? That's what I meant by that. Okay, so I actually thought that most of you were going to say, yeah, let's go for it, but you're not. So, all right, so I'm not going to take it then. I don't even know if I have a rule about this one or not, to be honest. It just looks like a normal trade. It would have been this is a legitimate trend-based trade. It's an inside candle breached. If I had my order in place, I would be in the market already at a worse price than I can get in right now. Okay. So actually, I'm just going to take it because it actually meets my rules. So let me just size this up. Let me take it. I'm going to enter at market. I'm going to place my stop below there. So my stop level is still the same level, and let me just size this trade up. Okay, so I'm going to go in that direction there. Give me 1 second while I do my numbers. Actually, let's see, do I have my manager installed on this one? My mini terminal. Oh, cancel. They've made some changes to the mini terminal, and like I'm seeing these lines here on the side. I haven't really played around with it. I only use the features that I like. Okay, so I'm going to enter in at market. I want to place a stop down here. So right now I am about 56 pips away from the market. So let me hit this little button here. For those of you who don't know how to do it, what I'm going to do is I'm going to place a order 56 pip stop loss on it, and I'm going to nominate $1 risk on the trade. So here I go. So I click on this one. I actually got it. There it is. Now what I want to do is I want to buy. I want to do a fixed cash risk, so I'm changing that. The risk that I want to take is, let's just take $100 on this one. My stop in pips, I want it 56 pips already measured. My take profit in pips, now 2 to 1, so let's just double that. That makes it 112. That's 2 to 1. And I'll adjust it if I feel I need to, but there you go, and place it. Here we go. I'm going in at market. Done. Okay, I can see that my stop is not correct. It's a little bit, I need to drag it down a little bit. So I've already bought. So by now, me dragging my stop down, this is important. My risk now is going to be a little bit bigger. It's no longer going to be about 100. It's going to be a little bit bigger. Just be aware of that. Okay. I didn't measure correctly. So what I can do, I can show you how to see your risk. Let me just open up I want to open up a terminal. Where is it? A trade terminal. If you don't know what I'm doing, this class, I always record this class so you can go back and pause it and look at it with a little bit more detail. Okay. Now this has changed on me as well, but what I'm interested in is this section down the bottom. Okay, you can see here. And see, there's a column here. Let me just move this a little bit further. There's a column here that says risk, and it says indicative. Okay, see right now it says 108.62. That's because I moved my stop. Okay, now if you cannot see it, what you got to do is right click anywhere on these columns, and there should be one that says columns, and you can add them in. Or maybe I've got to do it at the end. Oh, over here. Oops, no, wrong one. Oh, I can never get it when I'm looking for it. I've got them all active. Okay, because I've got them all active, I can see all of them. But there you go. So risk indicative. So I've increased my risk a little bit. Now remember, I just show you one extra thing while I'm here. I'll just minimize that. If I go back to this chart, you can see that there's my entry point, there's my stop, and this level here is my 2 to 1. Okay, now I know that is because I doubled the pips that I took here. I could actually adjust it now because it's probably a little bit more because I increased this one. I should increase that one a little bit, but let's just say it's 2 to 1. If I want to get out of the trade at 1 to 1, there, for example, what I'm going to do is I'm just going to automate my terminal now to close 50% of the trade when I get to this level there. Okay, so all I want to do is I just got to measure. Give me one sec. Well, actually, I know it's 56. So let me just move over. Let me grab my other terminal. I'll hit the little hammer sign here, and then I go into automate close, and I'll go to create. When my order is greater than or equal to, I said 56 pips, so let's make it 56, and then I click on close, and I want to close 50%. What I'm also going to do is, if I do get to that level, I am going to then move my stop loss to break even. So whatever number I choose there, I choose here, so 56, and what it will do is it will move my stop to my entry level. I'm going to click apply the rules, and now notice here that it's gone grey. It is now functioning. Okay, so all I got to do is I just got to make sure that I leave it running in the background, and if this should get to that level there, what will happen is half of my trade will close out, my stop will move to my break even. And last thing to point out is look at the size of the trade. It automatically sized it at 0.14, which was that $100 risk that I originally stated. I moved my stop, so I increased my risk a little tiny bit. All right, and that was just an error because I didn't measure properly. But it's only $8. It's not a big deal. Okay, any questions on anything that I did there before I change over? We are long US yen. The reason for the trade is it's a trend-based inside candle break trade. No questions? Let's move it along. Let's have a look at the US CAD. Okay, US CAD inside a nice channel as well. But let me have a look at a 4-hour chart. Do I like this as a double top? It's not really a double top. Okay, what I'm contemplating is, oops, let me change colors. What I'm contemplating is that, and when I zoom in, I don't have a candle pattern that I like, so that makes my decision easier. So I don't have what I'm looking for, so therefore now I'll leave it alone. Okay, I did step into a 4-hour to have a look at that. I was just trying to see if I could find another trade. Okay, so US CAD, look, let's just wait until we get to this level, and then that's a trade that we're really looking for. Okay, nothing else to say on this one. All right, let's move to the cable, GBP USD. Okay, so this is what I was talking about when we first started off. Look at this movement, and it has had zero retracement. It hasn't had anything. It had a little bit of long wicks here, but then it just shot straight through. This movement from the peak up here to down here is over 1,000 pips. So we did draw this line, and I did spot this inside candle as a daily call last Thursday, I think it was, but it never triggered. We actually broke on the downside, so it didn't trigger. Perhaps we might get another opportunity out of these two candles, which is Friday's candle and today's candle, to hit it. So if these two candles happen to do that, it would still be okay. It's not the best level, but it would be okay. Alternatively, it goes through, and then basically this is the next level down here. Let's just zoom out so we can see it a little bit better. Yeah, so that would be the next level, which is catching all of this, and then what will happen when we get to that point. At the moment, we still got a chance to try and get something out of that. We do need to wait for today's candle to finish, and let's see what it looks like, and we may get the opportunity out of these two candles right now. Okay, so GBP USD, wait till tomorrow, and we may get that entry there. Now, for those of you who might feel a bit uncomfortable with that chart, I can move the line around a little bit, and I can make it look a little bit better. Let me just redraw it. So you can see there that we're still catching it. It looks a bit better. I would be okay with that if we get the candle set up that we're looking for right now. Okay. All right. So that's GBP USD. Let's have a look at the Kiwi dollar. Okay, so the Kiwi dollar, we were looking last week to see if it come down to this level to give us the bounce, but it turned around before, so we didn't get any entries. So Kiwi dollar, it looks, if we do get some kind of a retracement and then we get price action reversal, then I would be interested in taking the trade and attempting to hit this bottom again. Okay, so this one's pretty clearly defined for me. What I'm looking for is today's candle's going up, so let's say if it goes up there somewhere, let it do what it's going to do, then wait for the price action reversal pattern, and then we would be interested in taking the trade in the downside as such. Okay, so that was pretty straightforward. That's Kiwi dollar. Let's have a look at oil. Okay, so finally I can lock in that top line. It's a rising wedge, and this one's coming straight at us. Very easy very predictable what I'm thinking right now. I'm looking for price action right there to take the trade in this direction. Very, very straightforward. And sometimes, when the pattern plays out and it comes and meets you, it's actually quite nice because we've been watching this one for a while. I think this is 4 weeks that we've been waiting to lock in that top line. Finally, we're locked in. The bottom line was always the good one, that it was already locked in because we got 1, 2, and 3 touches. We are now coming close to that 4th. Should we get it, well then that trade on backup is definitely on the cards. Okay, so WTI oil, that's what we're looking for. We're very close to it. That could happen this week, no problems. Gold. Oh, okay, gold. We got the break through that line, and it's coming back. Oh, what a shame. We're too late for it. In any case, it's not an inside candle. This week is higher than that week there, so it's not quite. This can be frustrating at times, and it's gapped down as well today, and it looks like it's possibly going to go into trend to fall. It's very, very normal when you come out of a breakout that once you hit it, then you can get this kind of momentum happening. Okay, unfortunately we've missed this. There's no trade for us there, so we just need to wait it out and let's see, wait for the next wave before we can get an opportunity to take the same thing. So we will have to wait for it to break through that level, Then when it pulls back, that's when we're going to look for it to hit it there. So I know it's a little bit far away, but that's what we would be looking for. Okay, so that's gold. And the last one for the week, ASX 200. Oh, this was frustrating as well because we almost got the setup right at the top, and look at this, nothing but red candles and no trigger. Okay, let me see. Let me zoom out a little bit. Okay, this chart we'll sit on the sidelines. Okay. With this particular one, we'll just leave it as it is. The trade was that one. When it's coming down now, we can't take that as an uptrend because we're going to go straight into that resistance point again. So we just need to let this one do what it's going to do and settle down before we can look for a trade again. Okay. Andrew's making a comment that we've got 8 candles in a row that are red. It's not applicable to a market, see, because essentially our index is when we go into the night session, it's influenced by another market. So those statistics, as I have mentioned in the past, is really only applicable. The research has been done on the Euro USD. From time to time, I apply it to different instruments, but this is one that definitely no. And if you have a look, it's easy to find sequences, long sequences. You can see there's another one right there. We're not even looking very hard. It's not applicable for this particular one, so that's something that I wouldn't take. And in any case, it seems I can see a lot of gapping. See, the market closed there, opened there, closed there, opened higher, closed there, opened higher, closed here, opened higher. So there's a little bit of gapping as well. So not interested in that particular method for this particular trade. Okay, so ASX 200, we'll just leave it. Any questions, guys? I'll go back and recap on what we've done. If anybody has any off-topic questions or anything, please let me know. Type them in right now, and we'll wrap up for today. Aussie dollar, we are still waiting to exit that grey zone properly before we're interested in a trade. Euro USD, we've got a very clear level down the bottom, although we're moving away from it. Let's see if it gives us an opportunity either down the bottom or if it pulls up and then trade back down into the support. US yen, we've just taken a trade. On the US yen. We are long. The reason for the trade is it's a trend-based trade. And we are also inside a channel here as well on the US yen, but it's not going to affect us because you can clearly see that my target level, which is over there, is still even lower than that high, and it's definitely lower than that channel. So there you have it. US CAD, we are in the middle. We're still sitting tight on this one. We're not going to do anything. GBP USD, we are at a key level. We may have an opportunity tomorrow. Let's just wait and see if it plays out that way. Kiwi dollar, definitely this one's kicked away, so we're looking for a pullback and then back into it as we head towards that support level. WTI, I'm getting the question being asked, is it a channel? It is not. It's a rising wedge. They're not parallel. If I draw a channel on it, maybe I have to, maybe I can squeeze one in. Just move my line out of the way. So you can see that, just get rid of that. Oh, I just got rid of everything. Okay, look, when I try to draw a channel, and I'm trying to catch all the points. I'm missing the top ones, and if I try and go this way, I can catch that, that, but I don't catch a point up the top there, so therefore it's not a channel. Okay, so it's close, but it's not a channel. So just to answer that question that got asked, but it is a rising wedge. So, and the one that I'm interested in is, let me just try and catch it properly. Okay, there. I'm interested in that line there. And then I've just drawn that one. Okay. Okay, so WTI, let's see what happens at this point here, and we might get an opportunity for a buy. Gold broke down, pulled back, it's pulling away from us. Unfortunately, we got no entry. We'll have to wait for the next wave. ASX 200, it's a chart that we are doing nothing today. So there you have it, guys. That is our analysis for the week. Was there any other questions from anybody before we call it a day and wrap it up? Okay, no, that's a no. So let's call it a day. I hope you'll have a great trading week. Don't forget, this week on Friday we have non-farm payroll is due. So look out for that one. That's over here. Last question been asked, where can you find the recording? You can find the recording on the CSC Traders website, Elof. You'll see it in there, csctraders.com.au, and the recording will be there. Okay, hope you all have a fantastic trading week, and I will speak to you next Monday, and keep watching the Daily Call. Bye for now.